You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
Hello, everybody, and welcome to the Option Block. I believe the #1 radio program for options, information, education, a little wit, a little wisdom. We have hats, we have watches, we have farmland in the middle of Illinois, we have Maine lobsters, we have almost everything you could want in one option program right here on the Options Insider Radio Network. I am Andrew Giovinazzi, filling in for the giant Mark Longo, who is out. By the way, everybody, he calls it work. I think he's in Florida or something on some sort of risk conference. Options-related shindig that takes him away to warm climates pretty much every time of the year, just around, or every year around this time of the year. But I'm not doing the show by myself. I'm doing it with two of the smartest guys in the options industry. First, since I guess I mentioned hats first, we have Alex Jacobson from Options Express by Charles Schwab. Alex, welcome to the show.
Andrew, good to be here today. And today actually felt like an update. Unlike Tuesday, today seemed to have a lot going on, and we'll talk about it.
That is good. I know. I felt a little greasy and cold after the update on Tuesday. I have to admit, it left me a little. It left me just unmarked. Anyway, we also have Mike Tusaw from RCM Capital Management. He of the strategy block, among many things. And some of the great rants in option block history. Mr. Tusaw, welcome back to the show.
Always happy to be here. Always happy to be known for the rants as well. And you're right. Today actually did feel like an up day.
It did. Well, I guess as long as your favorite fruit stock is up, it is an up day. So with the introductions made, we are going to roll right into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
Hello, everybody, and welcome to the Trading Block. This is the part of the show we run down all the interesting, sometimes hot, option-related topics that are floating through the industry. And as we mentioned on the start of the show, today was more of an up day, actually felt like an up day. So, Alex, since you kind of you started things off, what sort of highlighted this update for you today?
Well, been watching both rates and FX, and today some normalcy kind of returned to that market. The volatility we'd seen the last few days has subsided a bit. It hasn't subsided fully. The German and the Japanese are still trading pretty wildly, but the German came off the 0.1 level for the 10-year back up to 0.2. And as we mentioned in the intro, we even saw a bounce in lumber liquidators today. But pretty much everything was up across the board. Obviously, energy is still not in that everything is up list. Crude lost more than $1 today. Gold traded in a very narrow range. But the markets overall, the equity markets, had a good day and a busy day.
Yeah, I think what's your take on this? I thought today kind of felt like the financials led the charge in some ways because oil stocks did not look very good. As a matter of fact, it looks like we have a shot at plumbing some of the lows in oil. We're not too far away from those numbers. So you have a day normally when, the last 6 months or so when oil is sold off, stocks have sold off. And today definitely was not the case. Do you think, Mike, anything with the stress tests and maybe banks being able to return money to shareholders got everybody to giddy? A lot of bank stocks are up pretty sizably today.
Yeah, I remember last week when they had the initial testing numbers out, pretty much from the talk on throughout the financial news media was that, well, we got to wait until next week till we know for real what's going on with everything. But I definitely think that had something to do with today. Also, the fact that we're coming off of 2 down days. Yesterday wasn't too much of a downer. I think we were down like maybe 4.5 points in the S&P, if memory serves. But yeah, I think that's definitely the good news with the banks. Lumber Liquidator having their not press conference, but releasing their statement today. I thought that was kind of interesting, the way that they handled that. I'm curious to see, and I guess we can talk about this a little bit more around the block. I'm curious to see what they say tomorrow when they answer questions. I think that's going to be a very interesting news bit to watch tomorrow when the CEO answers questions on everything.
I think also the Lumber Liquidator story is kind of the classic. Nothing is really wrong, quote unquote, yet the stock is down tons. I mean, it had so much bad press, and I guess do they have like a sort of a poor earnings cycle? I mean, there was kind of there was bits and pieces of news. Then 60 Minutes, of course, did a pretty good hatchet job on them, and which is never really good for a company when 60 Minutes puts their claws into them. And now all of a sudden the stock is still down, tons. Maybe it was overpriced before, but it certainly got shellacked in a huge way. So, I mean, one thing about, I think, the 24-hour news cycle with stocks you don't really have to have anything actually wrong for a company just to get totally hammered, during the day. So I don't know if you guys have any thoughts about that, Alex. Has the story been fair, or has it just been, bad press and shorts kind of ganging up on this poor company?
Well, I don't know if the story's been fair. I've obviously watched 60 Minutes twice and read the news press. The problem here, it's kind of analogous to the Takata airbag story. It isn't so much that there's possibly a bad product, and that's going to be very difficult. I mean, imagine having to tear flooring out and what those costs and what that liability is going to be. And that's the issue. It isn't, I mean, it's going to hurt sales. And if the flooring is, as 60 Minutes described it, defective, they'll source it from new places. But, what are they going to do with all the people who've installed it already? And imagine having to take hardwood out and replace it. The expense is that's got to be what's weighing on them.
Right. Just the worst case scenario is what that's what I feel that the market is pricing for the stock. They've put in the expected value of the company basically at zero. If that happens. So
I would tend to agree with that. The other thing with it is that it just shows the power of people's emotions and people's perception, or the power of perception, because whether or not the product's bad or not, I know absolutely nothing about the Lumber Liquidator product by any means, but in the financial markets, the perception of the product is bad. And in this case, based on stock price, perception is reality. Even if the reality is it could be perfectly fine. Who knows? I don't anyway. But the perception definitely is something that's controlling the price of it.
Right. And I think that makes trading it, investing in it, and just about everything else, really difficult, because the market is still pricing what I would call, giant moves in the underlying, moves of like 25 to 30% or something like that. So it's easy for those to happen. I think probably over a 1 month time, the stock could easily be $10 or $50 again. So as the option markets try to do, it looks like it's at least trying to price the potential movement of this thing. I mean, we have the May at the money straddle right now is trading for around $10. So about a third of the value of the company, and it's probably cheap relative to the kind of news we've been seeing. So, but time will tell on that. Last thing here, we're looking at a little bit more news that we've had about retail sales, a little weak, but the labor market strengthening. I mean, on itself, is that enough to really drive stocks up, a point and 1.25 points for that kind of a rally? What do you think, Alex? I mean, we had some good news today, but was it really enough to really drive us that much higher?
Yeah, the problem is everybody spins these numbers into retail sales translate into here's what the Fed is now gonna do. And no, to your point, it wasn't enough to move us the 200 points we moved today. But these markets are still thin. I think that's still an issue with my rant about what happened to the liquidity providers and how liquidity is provided today and why moves are going to be exacerbated. But all of this translates into, I now know what the Fed's going to do. And you saw it this week. The market had so far 4 days of trading and 4 mood swings. So there hasn't been enough news to generate this. And the irony of this week is if we're up a little bit tomorrow, we're going to be unchanged for the week and have, a few 100-point days. It's sort of funny because the other day I was doing a webinar and I was doing it on iron condors and iron butterflies. And it was the day the market was down a couple hundred, and I made some comment about, their relatively market neutral positions depending on how you position them. And that's why you're really looking for kind of an unchanged market. And I had a slew of emails from people the next day and said, if you look at the market this year, it is unchanged. And you say, yeah, it depends how you parse, the time periods. If you're trading weeklies, you've had a ton of movement this year. If you're trading longer dated stuff, you got a market that I think today just went positive for the year again, which means it's dramatically unchanged. It's really the issue of how you parse these time periods. And I always come back to the study that my predecessor, Joe Cusack, made here at OX, where he compared selling weeklies to selling monthlies. And he did it from, I think, mid-2013 to mid-2014 and did it on the SPX, did it one standard deviation out, and, which did better. And the knee-jerk is, of course, the weeklies did better. And the monthlies did better by, I think, a factor of almost 4 to 1. Because when you think of weeklies, you think of huge erosion, but you overlook the fact that you got 52 settlements. And when things go wrong, it's that settlement. It's not the erosion. So, how you parse this, we have an unchanged market. We have a week. If you take in last Friday, we have 3 200-point plus days in the last 4, and we're pretty much unchanged.
And it still amazes me. Actually, it doesn't amaze me, but it feels like as we get closer to this Fed minutes meeting, are they going to take the language out? Are they going to keep the language in? With it makes things much more untenable, day to day. It also makes two saws put spread selling strategy sound pretty good because you just kind of wait till everybody hits the exits and then the next day it's all different. So maybe that might be, almost every year has a strategy that works the best. Just like some funds outperform everybody else because they happen to own the stuff that everybody wants. Maybe this is the year for the Iron Condor because they're going to end up 4% on the year, and Iron Condor strategies are going to kick some serious tail. Not unlike the put selling stuff that Mike does on the SPY. The last thing I'll mention for everybody that's been in and around the New York area is Shake Shack. The stock is finally coming off some of its highs. Do you have any thoughts at all at Shake Shack? Mostly because Sebastian, my partner at Option Pit, he thinks the company is just grossly overvalued and is due for a fall, and he's been waiting for this and wants to trade options on it. Do you have any thoughts besides thinking that they make tasty burgers? Either one of you guys.
Well, they do make tasty burgers, and their earnings were very disappointing today. The market clearly gave them a multiple based on forward expectation. I know the one they've opened in Chicago is they are literally lined up a block to get in, but the market multiple was rich. And there's a lot of competition in that space. They're clever people, but they're going to need to grow to justify that multiple. And today's earnings were a little bit of a disappointment. It had the IPO expense in it, but a little bit of a disappointment.
I'm still holding out for Portillo's to go public.
I think the Shake Shack with the multiple, it reminds me a little bit about Facebook, right? Where, a lot of people use the product, they like it. There's all kinds of, the potential for it is huge. And then still the stock dropped 50% from the IPO, and it became a bargain. And I'm kind of thinking the Shake Shack will probably be something along those lines where it will take a while for the growth to hit the hype, and then by then the stock will be down so much it'll become a bargain again. So I don't know. That's the way I'm thinking about that one. But holy guacamole, we have been moving on quite a bit. So I guess should we move on to the odd block? I think
let's get odd.
Should we get odd? All right, everybody. We're going to be moving into the odd. That will close out our edition of the trading block. And the last thing I will mention is just VIX in general. Before we get odd, we had a pretty good drop in VIX from the near 17 handle to close right around 1542. Me personally, I think 15 for the VIX would be the low into settlement next Wednesday morning prior to this FOMC thing. If we get much lower than that, it feels like the market has already decided what the Fed's going to say, because then we're talking about less than 1% type moves. So it would surprise me if volatility got a whole lot lower before Wednesday. Doesn't mean it can't happen, but I think today's drop-off was really surprising overall. That was a big change in sentiment, I think, overall from even just a couple of days ago. And like Alex said, we've had 4 different days and 4 different opinions about what's happening with stocks. So with that, with the market being odd, we will roll right into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, and welcome to the Odd Block. It's the part of the show where we parse just the strange, odd, and sometimes head-scratching paper. I did include something I thought that made absolutely no sense to me, but heck, somebody did it 10,000 times anyway, so it must have made sense to somebody. But first, we'll start off with Steel Dynamics, ticker symbol STLD. I don't know, Mike, if these are any names you've heard about or you even like these ideas, but Steel Dynamics, well, what do? It's a company that produces steel and it recycles metal. It operates in 3 segments: steel operations, metals recycling, and ferrous resources operations. I like when they say ferrous instead of iron. And any kind of steel fabrications. Okay, so it's a steel company. Now we know commodities have not been particularly rosy segment of the market lately. And yet today in Steel Dynamics, I'll give you, okay, Mike, we'll play guess.
Okay.
Right? Play guess. Okay. Guess what somebody did with the May 20 calls. Steel Dynamics is trading 18.14. Do you think they bought them or sold them?
I'll say bought them.
You would be right.
Whoa.
He's 1 for 1 in the odd block guessing game. Mike Tusa, who would have thunk it? With the stock trading 18 and not a huge range, although Steel Dynamics is at the very low end of the range. Let's get, and I'm going to pull up a chart here. So 25 is about the high of the year, and it's trading right near the low. So basically the whole range of the stock is around $7 from sort of peak to trough. And we have buyers of 2,500 of them, of the May 20 calls on splits for between 30 and 35 cents. And you'll never guess what happened.
What happened?
They're bid going out. They are bid going out. Unbelievable.
Wow.
So junky out of the money calls in a steel company near the bottom closed the day with a bid. I was actually quite surprised by that, I have to say.
Someone is really excited about steel.
Well, so this could be a stretching narrative. So I'll stretch the narrative a lot.
Stretch.
So China supposedly wants to start rationalizing the bloated state sector, which could, let's say it frees up resources, makes the economy grow, gets everybody happy again, and China starts buying more steel.
Got it.
Thus somebody is buying some out of the money calls in Steel Dynamics. I know that's a reach.
2,500 reaches.
2,500 reaches. They are plucking down some money though. That's what is 25, 60, 70 grand. That's not nothing.
No, not at all. And then
for a bunch of out of the money calls.
Figure if it does go up to 21 or 22 over the course of the next couple months, then someone's going to be happy in the steel world. I
think so. Anyway, so that was our trade for Steel Dynamics. There was paper overall in it, mostly buy paper. Even with the vol down a little bit, they like it. And Steel Dynamics does pay a 13-cent per quarter dividend. So at least somebody in the commodity business is making some money. Next, we have shares of PNK, which is Pinnacle Entertainment Corp. Have you ever heard of this one, Mike? Pinnacle Entertainment Corp?
They were at the casinos, I believe.
They are.
Yeah, this is that REIT that's buying them. We talked about it earlier. I'm sorry. Go ahead, Andrew.
No, keep going. No, you can keep going. You can hop in anytime. I'm not like Longo. I'm going to mute you.
Okay, all right. Lago leaves me on mute the entire show. This was, some REIT was buying some of their properties because we focused on it last week in the odd block as well.
Yeah, and this one has so they're basically, they own 14 gaming properties as Alex discussed. And what I saw here, and they had a huge pop in this stock recently. So there was somebody with a sizable September positions where, so the trade today, I had 3,200 of the SEP 3540 call spreads going up over the SEP 29 puts for 50 cents. The way the trade went up was they were buying the SEP 3540 calls, and they were selling the SEP 29 puts. Basically, the puts were trading near the bid, and the call spreads were trading near the offer. So now there is open interest of around 10,000 contracts. So if you open this position earlier, so this is, I guess, the idea is you're either closing a collar that you had on, right, with the stock up here, or you're getting longer. That's with the 10,000 contract open interest. So it almost feels like, somebody put on a collar maybe. They got a surprise with the run up in the stock, and they're just closing the collar down because they want to let the upside run. Right now, it looks like they're only closing about a third of the position. So if you had to venture to guess on this one, Mike, what would you be doing? So let's say you have a collar on, you own the stock, you just picked up about a $7 capital gain, and the collar is, I'd say not in a bad position, but it's only a couple of bucks out of money at this point. Would you leave the collar on, or would you take it off and just keep the underlying? What would you do?
Oh, that's a tough question. I would probably leave it on, honestly. If we have a $7 capital gain in a stock like that, I would probably leave it on, or if anything, look to close down the whole thing to get out before September. But I'm not that greedy of a person. The other thing with which I would consider doing is maybe closing out the collar and then maybe selling a put to get back in some way if it comes back. I'm of the school of thought that, you don't go broke taking a profit. Now, granted, I know you leave money on the table that way a lot of times, but still, if I have that kind of a profit in something, I'm probably there's going to be a whole lot of grinning going on, mostly by me.
Exactly. So I would be thinking that for them to buy this back, and close it out, that would make some sense to do that. But or you're waiting till September. So I think partially, I think they had part of the two-saw in them. They decided to take some of the collar off and possibly get out of a chunk of the stock. I did not see on time and sales, though, today. I got 150,000 shares did trade, which against this position, roughly, if you did that on a ratio, it could be, closing the stock out. So I think the customer actually went to the two-saw school of dollar management, and they're taking some money off the table.
Steve Miller time. Take the money and run.
Take the money and run. So at least we're seeing at least paper consistent with that, although they still have 2/3 of the position off. But feels like they're taking some dollars right now, which, you know what, like you said, nobody ever went broke taking profits.
That is true.
Okay, now here is one. So keep your ears open for this, Alex, because this is one. This trade I just could not at first. So first off, it's an IBM. Number one, we don't usually highlight paper in IBM, but this one today just made me. I had to scratch my head. That's all I could do with this particular trade. So IBM trading up 26 cents today to 157.06 when I profiled it. It's about the middle to the low end of the range. So IBM having a tough year overall. And what I saw was basically 10,000 April 160 calls and puts trading for $3. ADV for IBM is, it trades pretty actively. It's 32,000 contracts. The open interest on both of these strikes, so the call open interest was 11,000 and the put open interest was 8,000. So for the combination, it's an opening trade for them to put this trade up. At the same time, I saw 100,000 or 1 million shares going up with the stock trading around 156.91. So they paid $3 for the combo. It looks like they bought put and sold call. So they'd be trading a conversion for about 9 cents. So first thing I was thinking to myself, I was doing a cost of carry on the 9 cents. Maybe they make a penny on the whole, depending on what their long rate is. What I couldn't figure out is why the heck would somebody put up a conversion in IBM in April prior to the divvy? I could not think of one reason why you would want a conversion in IBM. Alex, maybe you could think of something, reach deep back into the Alex memory banks and try to figure out why anybody would want to put this trade on.
I'm still focusing on the $7 gain and what I would do with it. I'd be out buying a new watch and a new hat.
I would too.
I have no idea. I mean, much of the size trading in IBM lately has been Berkshire-related and Berkshire clones. But to your point, the X is in May. Why would I do it in April? I don't know. I can't think of a capital markets transaction that somebody would do. And then, you'd have to assume the stock trade was coincidental then. I simply don't know.
Yeah, that's what I did. So that's how I guess we're just going to close the odd block with quite possibly in the commissions on the trade, it's 1 million shares and 10,000 contracts. So they put it up for the I don't know reason, which I think is, let's just call that just straight odd. Okay. All righty. With IBM rounding out, we have the Pinnacle possibly taking money off the table, and STLD, a giddy call buyer, reaching for the stars as far as the China MO, or the reasons about China maybe restructuring a little bit. And with that, we're going to close out the odd block and roll right into the Express block.
The Express Block, brought to you by Options Express by Charles Schwab. Options Express by Charles Schwab lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources. Options Express by Charles Schwab is the online broker for all traders. Best of all, Options Express by Charles Schwab lets you trade stocks, options, and futures all in a single account on powerful yet easy-use trading platforms, including mobile devices. Visit optionsexpress.com for your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
Welcome, everybody, to the Express Block. This is the time and the place where Alex dons his fanciest hat. He puts on his best watches, possibly parks his Tesla, and gives us the rundown on what's going on at Options Express by Charles Schwab.
Yeah, nothing electric is allowed in our driveway. We're muscle car people. In fact, my daughter's boyfriend parked a Prius in the driveway one night, and we told him to leave. So just the ethics that's up here. So I'm just a very short Express block today, but there is a lot of cross-pollination between the podcast and the webinars we do at OX. And the other day I was doing a Iron Spreads, Iron Condors webinar, and then at the end of last week I was doing both versions of the Idea Hub. The Hub is a credit spread finder, and in futures, it's also a credit spread finder. And I got an interesting question from somebody who's both on the webinar and the podcast, and I thought the question was curious, so I thought I'd spend a minute with it today, and it was, give me a sense of the volatility ranges of the ideas that the Hub generates. So I'm going to do this quickly, but the Idea Hub is a quantitative credit spread finder. So it finds credit put spreads, credit call spreads, does it in futures options, does it in securities options. And every time I say securities options, somebody scratches their head. Those are index options, those are ETF options, those are equity options. And it does it, both of them do it based on the SIBO and CME volatility metrics. So volatility metrics are things like the VIX, which is the volatility metric, or the volatility benchmark for the S&P 500. Hub does it on 24 names, and in fact uses all of the SIBO volatility metrics where there's an actual underlying tradable. And the question I got is, tell me a little bit about the range. So I looked at Hub before we went on the air, and premium harvesting showed 102 ideas. The highest volatility idea was a condor in the market vectors gold miners, the GDX, which is trading about a 40% volatility. And then generally, the lowest volatility is the SPX, but today it wasn't. Today, the lowest volatility trade was on the FXE, which is the currency shares Euro Trust. And we've talked a little bit about currencies on the on the show, and they're generally very low volatility instruments. Obviously, the euro lately has had a little more volatility than it would normally have, but the FXE is about a 13 3/4 implied based on the SIBO benchmark, and it had a put spread up there in the FXE. Now, the reason I'm pointing this out is I know people who seek income from selling premium often trend towards the highest volatility instruments, and we could debate forever whether that's a good idea or a bad idea. But in Hub, you can see everything from instruments trading 13 vols. As I say, generally the SPX is the lowest vol idea up there. SPX would be off the VIX, and as Andrew just mentioned, it's in the high 15s. The highest volatility instrument today in the Hub is Market Vector's gold miners. Generally, the highest volatility instruments in the Hub are the emerging markets indexes, but they've been, it's not that they've been low vol lately, it's just that gold has displaced them. So that's today's Xpress block. Lots of ideas in the Hub. Go visit it when you have a chance.
I do love that Hub idea for helping people generate volatility ideas. I think it's a great, it's something we do at Option Pit a lot, is just helping people look at volatility. And I agree with you. What makes premium harvesting successful is low realized vol. I mean, the less the underlying moves, the better the shot you got at collecting anything you might sell. So, Mr. Schlesinger would be happy. He would be proud of us talking about a lower realized vol in order to collect that option premium you sell. So that might be another subject for an Express block or a strategy block, or I don't know what kind of discussion block. But for right now, we will close the Express block. And we will roll right. I believe a birdie tells me that Mr. Tusaw has a funny story on the strategy block.
It's time to dispense options wit, wisdom, and education. It's time for the strategy block.
All right, everybody, welcome to the strategy block. This is the portion of the show where Mike, I believe, it's a smoking jacket. It's a smoking jacket and a pipe. And today, just because springtime is coming, we'll add a glass of cognac or something as he sits back and he regales us on the strategy that's getting him most excited this week.
All right, as I sit here and sip my springtime glass of Mike's soft lemonade on the 85-degree day here up in the mountains of St. Charles, Illinois, after I ski in the morning, play golf in the afternoon, and then I'm going to go surfing at our local ocean. Well, I think I'm going to go through today. This is something to where oftentimes, I shouldn't say oftentimes, but I want to talk about the lottery and just how I like to think about it. Now, I know it's kind of an odd thing to talk about on the strategy block, because who in their right mind would play the lottery? Well, I want to tell you how I play it and the way with which I look at it, and it's just kind of a mental exercise with which I do that, number one, entertains myself, number two, annoys the bejeebers out of my wife as I do it, and number three, just kind of gives you a different perspective on how to play the lottery. I watch the WGN 9 o'clock news fairly frequently in Chicago, and about halfway through the news broadcast, they draw the lottery numbers. Now, the way with which I play the lottery is that of a premium seller, because I've often thought that playing the lottery is a ginormous waste of money, and it's not something I'm a fan of in terms of buying lottery tickets. I think you're better off just giving money to your church, or you're better off giving money to some worthy cause. If you want to throw money away, why not just do that? Now, I know you do have the chance of winning, and you can't win if you don't play, but let me tell you about how I play the lottery and how I have never lost in playing it. By not buying a ticket, I use this as a kind of a form of entertainment for myself. When the lottery numbers come on, what I'll say is I'll try and predict the numbers. And I'll just say 782 or whatever number I choose to predict. And 100% of the time, I have been wrong my entire life. The closest I ever got was one time back in 1997 when I was in college, and all my roommates were watching me at the same time, just out of pure chance. It was one of those 3-number things. I just said the numbers out loud. 2 of them were right. And the third one, I think I was 1 off. And it was a very funny moment in college life, but nonetheless, I was still wrong. And that was the closest I ever came to it. So by not playing the lottery, or by not buying a ticket for the lottery, I view that as making $1. It's my $1 a week investment that I make, not as a premium buyer, but as a premium seller. So by not playing the lottery, I'm up several $100s in my lifetime, yet I still get the same enjoyment and thrill of playing. It's just that I'm only going to win $1 when I play it, but I win every time. So with that being said, that is how I play the lottery, folks, and you can do it too.
There's actually some kind of strange brilliance to that. So the question is what are you going to do when you're retired with your lottery winnings?
Maybe I'll buy it. Then I'll become a lottery ticket buyer. I'll become a premium buyer then, maybe.
Maybe you'll just turn it around. Well, then you'll have enough money saved up where you can, maybe the lottery, you can buy 2 tickets a week or whatever.
So I'll regale you guys with an Illinois lottery story. When I went to the University of Illinois undergrad, the Illinois lottery was just starting, and my stats professor was one of the consultants to the lottery commission. I had 2 professors. One worked on emissions, and when Illinois went into the emission testing, the other guy worked on the lottery. And he made this interesting pronouncement in class one day about the statistics of winning the lottery. And it always stuck with me because I thought it was funny. And he said, you realize your chances of winning are only marginally increased by buying a ticket, which I thought was funny. But I thought it was a great line. But
that is very
apparently, yeah. Your chances of winning are only modestly increased by buying a ticket. So,
or buying 100 tickets.
Yeah. Well, you remember there was that one state where, for a while, a consortium got together, and they were buying every combination. They were spending whatever it was, $22 million, and the first time they did it, it worked well, and they made money, and the state kind of griped about maybe changing the laws, and the second time they did it, they made money, and the third time they did it, there were 2 other winners by coincidence, and it wiped them out.
I didn't think of that angle.
That's buying a lot of premium.
That is some serious premium. That is a fat straddle to buy there.
Well, I think that's quite a way. Tucson, I think that's a great lottery story. I like the premium buying aspect. Obviously, you can buy too much premium. Too much of a good thing is not a good thing. And with that episode of the strategy block, we'll just call it the lottery block. Let's move into, I guess, one of our favorite parts of the option block, viewer mail.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody. We are going to roll into that section where you tell us, well, what you think, what you're thinking, what you want to be doing, and throw questions at our august panel of options experts. It is time for the mail block. All right, so we got a couple of things here from the mail block. Let's start with, I think, this last one from Mark Brant. This might be a question for you, Alex, if you want to take it. I don't think we've had this one before. Do block trades show up on the retail brokerages, position ledgers as volume and open interest?
So I think what the viewer may be asking is a facilitation trade or a cross trade. I mean, if a block trade is done on the exchange, it prints and it's done, and there's a counterparty. It could be market makers. It could be an institutional brokerage house providing some of the liquidity. I think like on the SIBO floor and the ISE floor, if you're the broker bringing a block trade in, the crowd is entitled to 40% of it, and you're entitled to 60, but I may be wrong on that rule. So some of it may be internalized. In retail, there really is no internalization. The stuff goes on the smart routers out to the wholesales, but yeah, it's going to print. It's going to all be reflected unless it's done as an upstairs trade and stays upstairs, which is rare because eventually those are brought down to print for a number of legal reasons. But I kind of think that's what's being asked. Andrew, Mike, chime in, please.
As far as I can remember, open interest doesn't happen until after the trade goes up. So you won't see open interest till the following day anyway. That's one thing. The volume goes up today, but the open interest is printed the following day. So, I mean, as far as I know, block trades show up. I don't think the only thing I would say is sometimes a block trade is taken off a tape and replaced with another block. But as far as I can tell, and I'm assuming block trades from options, unless something's changed that I don't know about, volume shows up today and open interest will show up the following day. I don't know if you have anything to add to that, Mike, but feel free.
That's pretty much how I understand it. I yield to the experts on such issue.
I think, Mark, I think we've beaten your question about as much as we could. We flogged it. We try to get different answers, but basically it is what it is. I have another question here from Fred. Again, I don't think we've covered this one. What's the best way to use an option to speculate on the S&P's intraday movement? Did we cover that Monday with you too, Sa, or is this a different, or that was part of your strategy block, selling put spreads?
Yeah, this is a different one.
I think you're actually I think you're the right guy to answer this question for Fred, because you seem to do this fairly well.
So far this year it has been, but I typically don't want to do too much intraday things. But for what I'll do with intraday movement is if we see something going on that's what I feel is going to be a reversal, or if it's a big day, I'll do something. And we've had a lot of big days, and we've had an exciting road to nowhere thus far this year. So it kind of seems a little bit more intraday, but typically I have a longer time frame than that. But to answer your question, Fred, the best way to use an option to speculate on the S&P's intraday movement, my opinion, if you're a day trader, the best way to use an option on intraday movement is to not use an option. It would be to use a futures contract. If I'm in a day trade, I personally would not want to mess with implied volatility, time decay, that type of thing. I would want to do something along the lines of, if I think it's going to go up, I want to make money if I'm long, and I can lose money if I'm long if it goes down, and vice versa if I choose to be short. Reason being is that if the S&P does go significantly lower, let's say, not only are you making a bet on movement of the underlying, you're also making a bet on time decay and implied volatility as well. I know you're thinking, well, time decay is not going to be that big of a deal intraday, and it's true, it's not. But I would tend to, if you're looking to do something more intraday, my preferred method would be something along the lines of a futures contract, because if you're looking for it based on movement, if it's intraday, futures markets are very nimble in that stop losses are pretty good in that if you want to just have like a 2-point stop on the S&P, most of the time you'll get stopped out at the 2 points that you want to get stopped out at. Of course, there is risk on that, and that if you have a major intraday gap down like we had in the flash crash in 2010 or something along those lines, there's always that possibility. But from my standpoint, if I'm doing something intraday, I would tend to prefer just using a futures contract.
I like the way you think that. So I have a couple anecdotal things there, and Alex could. So one is probably one of the greatest traders, Steve Cohen. I know some guys that work on his desk. He flings E-minis all the time. Doesn't even bother with the options. And I'm just hearing that secondhand, but trades a lot of them. And he trades the future intraday stuff. Another intraday stuff way to trade, to follow up on Mike's idea, is hedge with a put and then trade the future. So let's say you want to be long, buy just out of the money junk put, right? And then, you go buy the futures. That way you're stopping yourself out automatically in case anything goes, horribly bad. And you can use the put, day after day. If you want to make sure, if you want to hedge some sort of sudden move that you don't think you'll be able to unwind. So you could do that from either side of the market, buy a call and hedge your short, because you'll still get the synthetic position that you want. You won't get all the bang for it, but you'll get a lot of it, and then you don't have to worry about, a blow up happening when you have no way to get out of your future contract. At least you're stopped. So that's one
good
way.
Idea.
Second way too is I like a lot of what I've just heard Mike talk about, and just what I do is I have kind of a long-term position I want to put on, but I use intraday movement to get in, where you had a big drawdown and you think, okay, I'll sell some out of the money puts. That's something a lot of our clients at Option Pit do a lot. Some of the better premium sellers I've seen, actually, they're very good at it. And they use intraday movement to key something that they might want to do that fits a long-term perspective. So those are the ways I just offhand thinking about, speculating on intraday movement, I would say is a very difficult thing to do well. I'm going to say probably few people are able to do it well. And I mean few. I kind of liken it to like, there's like everybody can play golf, but there's only top 10 golfers in the world, and everybody else just is, trying to get that good. So it's probably not too unlike that for intraday movement. That just is my 2 cents on that one. Anything to add, Mr. Jacobson?
Just a little bit, but both you guys did an excellent job. This podcast should cost money. That advice was so good. If you're in an account that can't do futures, and you do want to trade intraday, and you've heard how difficult it is, but you insist on doing it, the vehicle I would use is an in-the-money spider. Because really what you heard both Andrew and Mike say was the challenge you have for a very short trade is all the optionality, the change in implied vol, the time erosion, all that stuff. So how do I minimize that stuff? Well, I go to a futures contract, I eliminate it. If I hedge the future, I eliminate the downside. That's the synthetic futures call. But if you're in an account where you've got to be on the security side, I would stay away from the SPX, simply because as a pit traded instrument, there are times of stress when the bid offer gets a little too generous. And I would use something like an in-the-money spider. The reason being it just trades on more exchanges. So even at times of stress, it's a little crisper in terms of bid offer. And the thing is, we used to teach traders, establish a threshold of pain and a threshold of panic. If you are trading intraday, have a mental stop and then a real stop. Threshold of pain is your mental stop. And then you look at things and say, well, yeah, okay, so Janet Yellen didn't say exactly what we thought. Maybe I'll stay in this trade a little longer. The other thing is learn the relationship between futures and cash, because in reality, everything prices off that in the end. So you want to have a futures quote up, even if you can't trade the future. And if you can't get a futures quote because your platform charges more for futures quotes, change your platform. You need that futures quote.
I like that. That was good stuff, Alex. I think after that, we're going to charge double for this show.
Triple.
I think, and then I have a feeling Tucson's going to add something that is going to make it worth triple the cost of the show. Now, we're going to charge 3 times.
I am excited. I have a client that he typically does spreads, like he'll do diagonal spreads, verticals, that type of thing, occasionally some long options, but he has a portfolio margin account. And he only has it just for the reason that if he ever wants to start using more margin on it, he wants to have it available, but he's had it a long time and he hasn't used it yet. I don't know if he ever will, but either way, I'm never going to go up to someone and say, you need to start taking on more risk. That's something I'm just not going to do. But he did come to me. He wanted to know, he wanted to try day trading some S&P mini futures. And I said, well, okay, you can do that, but why you have hundreds and hundreds of thousands of dollars that you're not using in leverage right now, and we could set up your account to become we could get you a futures account. It's not a big deal, but before you even do that, what you could do, are you thinking about just doing like a one lot on the E-mini? And he said, yeah. So what I suggested to him before he even did that was to just day trade SPY. And the reason I said that was because of the fact that he's in a portfolio margin account. The maintenance requirement on SPY for day trading would be a little bit more than an E-mini future. And the tax treatment would not be as good because you wouldn't get the 60-40 tax treatment. But in his situation, he had money on the side available to do so. And we had talked about, like, can you do the stop losses, the OCOs, things like that. And, we looked through it, everything he wanted to do, we could do it. Now, ultimately, he decided not to do it. But another way with which if you have a portfolio margin account and you're looking to maybe just get your feet wet and you don't fully grasp the language of futures as of yet, maybe a good starting point would just be to do the underlying and use the portfolio margin leverage.
I like that. I like that a lot, actually. And hard to believe, but this show we are going to charge 3 times the amount for the show. I've decided I'm going to tell Longo that the show was way too good with him not on it. I think we should charge 3 times as much. How do you think that's going to fly, you guys?
Andrew, I listened to you do your butterfly traded expiration, and you've heard me compliment you on this. That 20 minutes you did, people charge thousands of dollars for classes like that. So, yeah, there's a lot of value here. But I got to tell you, that resonated with me. We're months later, and people should go back and listen to that explanation. But yeah, we should start charging.
Okay, I think we'll tell Longo that we're going to start charging every time he's not hosting the show. We're actually going to charge for him. What do you think?
We'll put a tip jar on the piano.
Exactly.
There you go.
Collect. All right. Well, with all I can say is a fantastic mail block under our belts, we are now going to move to Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
And hello, everybody. Welcome to Around the Block. This is, the sad end of a fantastic show where we talk about the stuff we are watching this week. And we are going to start with the man of many hats, Mr. Alex Jacobson.
Watching a handful of things. Watching the sovereign 10 years, watching VIX. I think the sovereign 10 years, Germans and Japanese are going to see some yield increase. I think our 10 years is going to go down. I think VIX is going 14, 13. I don't know if it will do it by expiration. I think the Dow powers back up over 18,000. And the only thing that frightens me is the price of oil. I think if it continues to go down, that contagion is going to spread to the rest of the market.
I can't disagree with any of that stuff you're saying there, Alex. Mike, what do you got for us?
Fed. Just want to see what happens with that. Also, just looking to see if we actually make some actual movement in the market. We've had plenty of movement, but it hasn't gone anywhere. It's been just an exciting road to nowhere. So with that in mind, we are up a little bit on the year right now. I'm laser focused on the 205.54 mark on SPY. That's where we closed 2014. And I want to see if we can hold that through the weekend. Because if we don't, then we're negative on the year again. And then if we're negative on the year again, then I got to start managing risk, and I can't be a bull like I like to be.
Yeah, I know. It's a very strange. I think the oil situation is we'll just call it the weight on the market, because that has to find some sort of level. It really does feel like OPEC has tried to put the screws to the shale producers as a competitor, and they're apparently right now they're doing a pretty good job of it. I don't think our domestic ability to export domestically or any of the handcuffs on the industry domestically are probably doing us any favors either. But I'm looking at myself, I'm looking at the Fed. And if volatility really gets much lower tomorrow, the market is definitely going to be blowing off whatever the Fed says, as in, hey, they're just going to take what comes and we're adjusting to the possibility that rates will go up, which in general, I remember the 1990s, rates pretty much went up for 8 straight years and it worked out fine. So as soon as everybody gets over the fact that growth is better than just the low interest rates, the markets will probably do okay. And maybe we will get those highs. All right, that is going to do it for Around the Block. And I guess here toward the end of the show, what's cooking for Alex for you at Options Express from Charles Schwab?
I'll just showcase a handful of events. Our next live event is this Saturday. Jimmy Rosanna and the crew will be in Phoenix, Arizona for their event. It's a free live event, a handful of webinars. Tuesday, March 17th, Nina's going to do multi-leg, showcasing 3- and 4-leg options and the ability to trade those that exist both on the Schwab platform and the OX platform. Tuesday night, 8 p.m. Central, I'm going to do my evening iron spreads, iron condors, iron butterflies. I do that predominantly for our international customers, but a lot of domestic customers like to tune in. Wednesday, March 18th, midday, I'm doing Hub for Futures. In the afternoons, Nina's going to do protective put hedges in the IRAs. And again in the evening, I'm doing back-to-back iron spreads, backing those up on the 17th and 18th of March. All the events are free. You don't need an account. Just come to optionsexpress.com and click on the free education tab.
Wow, that's a lot of goodies going on over there. All right, Mike, what's going on at the growing behemoth that is RCM Capital Wealth Advisors?
The growing behemoth. Have some more events coming up. We just had one last night in Minneapolis. But right now, I just like to, in tax season, if you have not done your taxes yet and you are looking to set up an IRA, give me a call. We'd be more than happy to work with you along those lines. Because of the fact that I'm primarily an online financial advisor, I'm happy to work with accounts both big and small. I have them from 3 figures all the way up to into the 7 figures. But nonetheless, if you have about $500 a month to invest, would love to work with you in one way, shape, or form. Feel free to send me an email at mtusaw@rcmfs.com or give me a call at 312-212-3531.
And with that, we will be announcing our next weekend webinar series. The last one went really well, our best attended ever. And when that announcement comes out, you can show up at www.optionpit.com. But of course, you can stop in for the chat, gold or platinum classes that we give. If you like all the stuff we say here on the Options Insider Radio Network, you can do more learning popping into our website. All right. And with that, I think that will close the show. And everybody, have a good weekend, and that'll do it for us here on The Option. Bye-bye.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.